And welcome back to Biz Asia America. I'm Michelle McCory at the NASDAQ. Hewlett-Packard reported another sharp drop in profits in its second quarter earnings, but still beat market expectations thanks to cost cuts and better than expected results in its printing and services business. And shares of the world's largest computer maker are up over 13.5% in after-hours markets. For more details on the company's performance, we're joined by Mark Niu live from Mountain View with all the very latest. Mark.
Michelle, slumping HP did better than expected. The company reported a second quarter profit of $1.08 billion or 55 cents per share compared with a profit of $1.59 billion or 80 cents per share during the same period a year ago. Even though net income fell 31% and revenue 10%, it was still enough to beat Wall Street's estimates. That just goes to show that expectations are not very high because the company continues to face an uphill battle in its efforts to recapture its glory days. CEO Meg Whitman has pledged to turn the troubled technology giant around. But that pledge needs more time, especially since HP's Company Personal Systems Group, which covers PCs, reported a 20% drop. Mobile computing has been devouring PC profits, and HP's in particular.
They don't have any mobile applications right now. I mean, they have a tablet that just came out, the HP Slate. It's priced to sell. It's not going to appeal to people that are into super high definition displays and ultra fast processors, but it's only $169. It's running on Android, so it's capable.
CEO Meg Whitman has said that ultimately HP has to offer a smartphone, but she went on to say that such a product would not launch in the year 2013. It appears HP is not ready to enter the mobile markets, despite the fact that its other markets are dwindling.
You're not selling laptops in the $1,500, $1,200 range anymore. You're now down in the $500 to $800 range. So the profit has been kind of taken out of the PC sector. Same with printers. The hardware at the printer level is almost given away. The big issue has been the ink. But one very big thing that's changed is email. We don't print stuff anymore.
Baharian says HP has done better when it offers total package solutions that allow it to manage both hardware and software services for companies.
They and Dell and any of the guys who are traditional hardware guys, they absolutely have to make this complete transition to a world where solutions and services is where all the money is. The fact is that competition for managing IT and services has basically quadrupled in the last 5 years. And as a result, they're not the only player.
Baharian believes Whitman has instilled a new level of confidence at HP, but he also says market forces are in charge at the moment, and the best Whitman can do now is manage HP's response to those changes. In the company earnings call, Whitman said she was encouraged as to where HP is now. When pushed on whether HP could at least reach neutral revenue growth soon, she said, "I think we have a good shot at growth in 2014. She also stressed the size of HP, saying it was an enormous global organization with 180,000 partners that need to be brought along. She also took a shot at Dell, citing its recent 79% drop in earnings. She said maybe that's what you do when you go private, but it doesn't work when you are running a publicly held company that's trying to create the financial capacity to invest and innovate in the future." Michelle.
Thanks, Mark. Interesting she says that, given HP's profits were down 32%. But thank you so much, Mark Niu, live from Mountain View, as always.